What's up guys, I hope you're all doing very well. Today I'm bringing you some highly bullish propaganda, so if you're a bear, viewer discretion is advised. What I have in front of me is the DXY chart. Now this chart tracks the US dollar index, which means it measures the value of the US dollar against other foreign currencies, reflecting its relative strength or weakness in the global market. The DXY is a useful reference for analyzing assets across all markets from a macro perspective. Put simply, a rising DXY signals a stronger dollar, making cash king. This often leads to sell pressure across various markets as investors hedge by holding cash. Conversely, a falling DXY indicates a weaker dollar, prompting investors to seek alternative stores of value like stocks, cryptocurrency, commodities, and more to protect against the dollar's decline. Often the DXY drops indirectly due to inflation, leading investors to hedge by buying assets. We saw an extreme example of this during the COVID lockdowns when the Federal Reserve printed vast amounts of money, causing significant inflation and driving investors to buy anything that could potentially hedge against it. That's why Bitcoin and so many other assets rallied so hard during this period of time. Now, admittedly, we are massively oversimplifying here, and while a general inverse relationship does exist between the DXY and risk assets like stocks and Bitcoin, it's not a perfect correlation. Other factors such as interest rates, economic data, geopolitical events, and market sentiment also play significant roles in determining asset prices. But to keep things simple for this video, when the DXY dumps, market pumps. When the DXY pumps, market dumps. Now I'm going to apply the line Bitcoin chart, logarithmic, as this makes the most sense visually here, and from this we can make a few observations. Firstly, the inverse correlation between the DXY and Bitcoin. We can see when the DXY is in a downtrend, Bitcoin tends to be in an uptrend, and vice versa. So this does support our thesis that a weaker dollar often leads investors to seek alternative assets like Bitcoin. Secondly, there are some key historical patterns worth noting here. We can see two significant periods highlighted here in red where the DXY formed a topping pattern and subsequently broke down. Once support was broken, we saw a major Bitcoin rally. These periods appear around 2016 to 2017 and 2020 to 2021. Now, based on the assumption that past performance is indicative of future results, the current DXY topping formation could suggest an upcoming Bitcoin rally, assuming the DXY breaks support here. There's a well-known phrase in trading, and I think it reflects best in crypto markets. 80% of gains are typically made in the last 20% of the bull market. Many people in recent weeks and months have capitulated, and the current sentiment, I believe, is one of doubt and uncertainty. But as we can see from this chart, the final run of each bull market has been when DXY breaks major support. So to summarize, in my opinion, we are yet to see a market cycle top for Bitcoin. I believe that the final leg of this bull market is yet to come. My thesis is based primarily on retail sentiment and my macro analysis of the DXY, and most of the gains will be made in the last leg of this cycle, in my opinion. Now, should the DXY bounce from here and show strength, I would not consider my thesis invalidated. However, I would anticipate Bitcoin to continue to stall at and around its current price range. We cannot ignore the clear bearish market structure on a more local time frame here on Bitcoin, putting in lower highs and lower lows. However, I would consider this to be more of a descending wedge / area of consolidation than a clear cycle top. As always guys, thanks for watching. If you've enjoyed, please leave a like and remember to subscribe. Take care.